Hey everyone, welcome back to Finzergy. If you're new to the channel, my goal here is to help you take control of your finances and make your money work for you. And today, we've got an exciting topic that many of you have been asking about. How to invest your first $1,000 in 2024. If you've got $1,000 burning a hole in your pocket and you're wondering where to put it, you're in the right place. We're going to break down the best ways to grow that money, whether you're looking for short-term gains or long-term wealth building. 2024 economic landscape. But before we dive into the strategies, let's talk about where we are economically in 2024. Interest rates are higher than in previous years, inflation is still a concern, and the stock market is experiencing some volatility. So, how do we make sure we're still able to grow our money despite these conditions? Don't worry. This video will show you exactly how to navigate these challenges and come out ahead with your first investment. Section 1. Why invest your first $1,000? The power of compound interest. First things first, the reason you want to invest your money rather than just saving it in a bank account is because of compound interest. Compound interest is basically money working for you. The longer you leave your money to grow, the more it snowballs over time. Start early, even with small amounts, and over time, you'll be amazed at how much your money can grow. Beating inflation. Now let's talk about inflation. In 2024, keeping your money in a regular savings account just won't cut it. The average interest rate on savings accounts is still under 2%, while inflation is likely hovering around 3 to 4%. This means that if you don't invest, your $1,000 could lose value every year. Investments, on the other hand, have the potential to outpace inflation, allowing your money to grow in real terms. The importance of diversification. When you invest, you don't want to put all your eggs in one basket. Diversification is key. This means spreading your money across different assets or investment types so that if one goes down, others can make up for it. I'll go into more detail on this later, but remember, diversity reduces risk. 2. Best investment options for your first $1,000. Stock market investments, stocks, and ETFs. The stock market is probably the most popular place to invest. With $1,000, you have a couple of options. Individual stocks or exchange-traded funds, ETFs. Individual stocks. If you're interested in picking stocks, you'll need to do your research and find companies with growth potential. Start by looking at blue-chip companies or industries that are expected to do well in the next few years. Just remember, stocks are volatile, so don't expect overnight success. ETFs. For beginners, ETFs are a great option. They are essentially collections of stocks bundled together into a single investment. ETFs, like the S&P 500 ETF, which tracks the 500 largest U.S. companies, are a low-cost, diversified way to get exposure to the stock market without the risk of picking individual winners and losers. Real estate investments. Real estate is a great way to build wealth over time, but you don't need to buy a physical property to get involved. REITs, real estate investment trusts. REITs are a popular choice for small investors. These are companies that own or finance real estate projects, and they pay out dividends to investors. With just $1,000, you can invest in a REIT and get exposure to real estate without having to buy property yourself. Crowdfunding platforms. Platforms like Fundrise allow you to invest in real estate projects with as little as $500. This is another way to diversify your portfolio and add some real estate exposure. Robo-advisors. If you're new to investing and don't want to pick individual stocks or ETFs, robo-advisors are a great option. They're automated platforms that create and manage a diversified investment portfolio for you based on your risk tolerance. Apps like Betterment or Wealthfront will take your $1,000, create a personalized portfolio, and rebalance it for you, all for a small fee. Cryptocurrency. Cryptocurrency is an option that many people are exploring in 2024. While cryptos like Bitcoin or Ethereum have the potential for huge returns, they're also very volatile. If you choose to invest in crypto, I recommend keeping it under 5% of your total portfolio to manage risk. Bonds. If you're looking for a safer investment, bonds are a good option. They are loans that you give to corporations or the government in exchange for regular interest payments. While they won't make you rich quickly, they provide steady returns with low risk. 3. Things to consider before investing. Assess your risk tolerance. One of the first things you need to know before you invest is your risk tolerance. Are you comfortable with high-risk, high-reward investments like stocks and crypto, or do you prefer low-risk options like bonds and REITs? Understanding your risk profile will help you choose the right investments for you. Investment fees and commissions. Every investment platform has fees, whether it's transaction fees, management fees, or fund expenses. Always look for platforms with low fees, because these will eat into your profits over time. For example, ETFs usually have lower fees than actively managed mutual funds. Investment time horizon. How long can you leave your money invested? If you need to access the funds quickly, look for more liquid investments like stocks or ETFs. But if you're in it for the long run, you might consider real estate or bonds. 4. Strategies to maximize your investments. Reinvest your dividends. If you're investing in dividend-paying stocks or REITs, consider reinvesting those dividends rather than cashing them out. This accelerates the power of compound interest, helping your money grow faster over time. Dollar cost averaging. Dollar cost averaging is a strategy where you invest a fixed amount of money at regular intervals, e.g., every month. This reduces the risk of investing a lump sum at the wrong time when prices might be high. Stay calm during market fluctuations. The market will always have its ups and downs. One of the biggest mistakes new investors make is selling in a panic during market drops. The key is to stick to your plan and think long-term. 5. Common mistakes to avoid. Lack of diversification. Don't put all your money into one stock, one asset class, or one investment type. Spread it out to reduce risk. Failing to do your research. Never invest in something just because someone else is. Take the time to understand the investment you're making. Look at the company's financials, understand how the market works, and check out the potential risks. Investing without a plan. Make sure you have a clear investment strategy. Are you looking for short-term gains or long-term wealth? Know your goals and make decisions based on that. Conclusion and call to action. So there you have it. Whether you choose to invest in the stock market, real estate, crypto, or other assets, the key is to get started and make your $1,000 work for you. Remember, investing is a marathon, not a sprint. Start with what you have, and over time, you'll build wealth if you stay consistent and make smart decisions. If you found this video helpful, make sure to like, subscribe, and hit the bell icon so you never miss another video. Let me know in the comments which investment strategy you're most excited to try with your first $1,000. Thanks for watching Finergy, and I'll see you in the next one.